Hi there, how are you doing? Okay, I guess we can begin. Let's try to start these things as much on time as possible. See more people joining in. Okay, let's kick it off. Today we're going to talk about euro dollar action. Actually, we're seeing a bit of movement now, but I think it's nothing in comparison to what we'll see in the next few days. So it's getting busy. So just a short presentation of myself. My name is Yochai. I work as a senior financial analyst for FX I lead FX premium content offering. My focus is on fundamental analysis. In my past, I used to run a website, founded a website called Forex Crunch, and back in 2008, and I'm with FX since 2018. Okay, so as I mentioned, today's topic is, well, ECB plus CPI fireworks. So for those of you who are new to these terms, ECB is European Central Bank, and there at the top left corner we have Christine Lagarde, President of the European Central Bank, and inflation CPI's Consumer Price Index, which is the main inflation figure in the United States. And on the bottom left corner we have Jerome Powell, the chair of the Federal Reserve, and a few fireworks. So we'll talk about these two events, and then we'll talk about euro dollar levels to watch. Just open the charts a bit, and and you're welcome to ask questions. We'll have a Q&A session at the end. So European Central Bank, what's going on? So finally they're going to raise interest rates. Look how low they've been, how they've gone only to one direction, but they're not raising interest rates right now. They're only announcing the end of quantitative easing. Quantitative easing is the process of creating money out of thin air to buy bonds. Why buying bonds? To lower long-term interest rates and provide, they're not saying it out loud, but more money to governments in order to stimulate the economy. And they've been doing it until now. They're only going to announce the end of bond buying and then immediately raise rates afterwards. Because they promised to do the sequencing. They don't care that inflation is a bit high. They want to move very, very gradually. Okay, why do they want to raise rates? Maybe that's the bigger question. Well, headline inflation reached 8.1%. That's very high for Europe, where everything moves slowly, including prices. And even core inflation is up 3.8%. So it's mostly energy prices driven by the war in Russia's war in Ukraine, and also by supply chain issues, food, not that much by rising salaries like in the United States. I would say it's mostly because of the war, but the war also causes uncertainty, so you've got a balance between these two things. So the war raises oil prices WTI at around 120, but it causes less uncertainty. We're seeing business confidence, consumer confidence gradually rising. On the other hand, Europeans, people living here like myself, we have less money in our pockets, so we're buying less of other stuff. So maybe higher prices are already curing higher prices. This is more or less the dilemma of the European Central Bank, but I believe it'll act now. It has a short window to act. If anybody's living in Europe or all over the world, you might have seen these these kind of messages where you're looking for flights in Google Flights. Prices are currently high for your trip, wherever you go from wherever. Lots of people want to take advantage of no need to wear face masks, and there's money we saved during the pandemic, and we want to travel, so prices are going up, and even wages are rising just a bit. Okay, but uncertainty is still high. The ECB, the European Central Bank, has a short window of time to raise interest rates before it becomes a bit complicated. Things might turn to the downside. Okay, so what decisions are they going to make, and how do we expect Eurodollar to react? So first of all, they're going to conclude the QE program. That's a given. That's priced in. They're going to say that's it. We're not buying any more bonds. It'll end the next few weeks, and they'll reaffirm what they already told us in several occasions, that they will raise rates in July. That's their next meeting, and also in September, the following one. Here you can see the chart of the ECB's balance sheet, how it was stabilizing before the pandemic and then just blew almost to 9 trillion euros. So now they're gonna finish this, not squeeze it just yet, but raise interest rates. And it's going to be the first time since 2011 that they'll raise interest rates, well, at least announce it. Now, ECB President Christine Lagarde, her words about what's next, what's in July, that's what matters most, okay? Will she say what she already said, 25 basis points, which is a standard rate hike? Is that what they're going to do in July? That's the small Oreo cookie there you see. Or is it going to be a double one? Is it going to be a 50 basis point rate hike? We're talking about the deposit rate. The deposit rate is what commercial banks get or pay for keeping money at the ECB. That interest rate is below zero. It's at minus 0.5, minus 0.5%, okay, for, well, since 2020, since around the pandemic. And that means that commercial banks are punished for keeping money, for parking money with the ECB. So, well, she raised it to minus 0.25 or to zero. We're talking about only to zero, okay? And that, I think, would boost euro dollar. Now we're looking at euro dollar as I speak. It's moving a bit higher. Today it's, so maybe a 50-point basis hike will not be a total shocker, but I think it would boost the euro. And another thing to watch out for is that the ECB will be making forecasts for the future. Now, this guy, this famous baseball player, Yogi Berra, said that it's tough to make predictions, especially for the future. And that's, well, that's easy to say, but they'll try anyway. Every 3 months, the ECB publishes new forecasts for growth and inflation. Now, inflation, they've been wrong so many times in the past, I think markets will ignore it anyway. It's been rising faster than expected. So if they raise inflation forecasts, I don't think it'll have an impact. But if they lower growth forecasts because of the war, because of oil prices, because of uncertainty or whatever, I think that could weigh on the euro. So if they say, okay, we're going to raise rates, or we're going to leave the door open, it's either going to be 25 basis points or 50 basis points, but at the same time, they're lowering interest, they're lowering forecasts for growth. How can they raise interest rates at a fast pace when they lower growth forecasts? If there's higher growth, okay, there's also higher inflation and they can raise interest rates safely. But if there's a risk of a recession, that's a bit difficult to raise rates fast. So I would, and forecast is not something that they publish with the statement. Statement is published at 11:45 GMT. That's 1:45 here in Europe, or 7:45 Eastern, and only 45 minutes at 2:30 local time, 2:30 p.m. and 12:30 GMT, 8:30 Eastern. That's when they publish. That's when the press conference begins. So only then, some 15 minutes into that press conference, 1 hour after the statement, that's the only time that that Christine Lagarde will read us the new forecast. So if she says, I don't know what's going to be with interest rates, everything can happen, we can raise them very fast, but then she announces lower forecast, not going to be good news for the euro. I think it'll push the euro down, especially as we're seeing right now that the euro is rising. So I think some market participants are already trying to front run a more hawkish decision. And I think forecasts could be the Achilles heel of any upward move in the euro. So my bet is that we'll have an open door to 50 basis points in July, or upbeat if we get upbeat forecasts. Only if she says maybe 50 basis points, and they're going to present strong growth forecasts, that'll be euro positive. In any other case, I think it's going to be a buy the rumor, sell the fact, where you see euro dollar, like now, running a bit higher towards the event, and then once they announce the end of QE, open door to raising rates, but lower forecasts, that's when I believe euro dollar could fall. Any questions so far? Do a small pause before before we move to the next to US inflation. I'll take this small pause I'm doing to remind you to look at the what I've written in the chat. If you're not a premium member right now, you can join. You'll have unfettered access to my colleague Tomas Sayes and myself. You can ask us any questions, and we also have other features there like signals and premium webinars. Next week's webinar about the Fed is a closed one only for members, not like this one. So you're welcome to sign up if you're still not a member. Yeah, we have lots of activity recently on our Discord channel. I must enjoy it very much. All your smart questions. If you're already premium, if not, you're welcome to sign up. Okay, I don't see any questions here in the chat. So let's continue to Friday's event. So on Thursday, tomorrow, we have the ECB. On Friday, we have US inflation. Okay, inflation is the most important thing now. I may dare and say that CPI this Friday is more important than last Friday. CPI is more important than non-farm payrolls. It may come as a shock to those of you spending lots of time in markets, and non-farm payrolls. First Friday of the month is the biggest deal. It might return to being like this, but for now, inflation is more important. Prices at the pump are up. Okay, there's lots of criticism on President Joe Biden for overseeing inflation. Some is his fault, some is energy prices in global markets. Everything is rising in the US, even salaries, which is not a bad thing. Of course, if you have more money in their pockets, it's not bad. But if unemployment is high, it jumps from 3% to 10%. Still 90% of people have a job, which is, and they feel okay with their lives. When prices are rising, they're rising for 100% of the people. So that's a huge political problem, and politics from Democrats, from Republicans, from, well, anybody, that's putting a lot of pressure on the Federal Reserve to act. Yeah, so the Fed focuses on inflation. Contrary to what it said just a year and a half ago, they now focus on keeping inflation down. They're ready to accept slower growth, ready to accept higher unemployment, and even what Fed Chair Jerome Powell here in the picture said, softish landing, which means a mild recession. Okay, so even a recession, small one, hopefully, would be okay to keep inflation down. Now, they already committed to raising rates by 50 basis points in June, which is just next week, and July in a month and a half or so. So interest rates in the US are now at the range between 75 and 100 basis points, just under 1%, and they're expected to rise to 2% in just during the summer. The question is what's next, and a lot depends on inflation. Okay, I think we're beginning to witness signs of peak inflation, very tentative ones. We're seeing the peak inflation out there in the behind the mist. Okay, I'll just here are a few things. University of Michigan, they have a very closely watched survey of consumer sentiment. The headline figure is mostly political. It's down. People are unhappy with Biden and inflation. What's more important is inflation expectations. They've been revised down from 5.4 to 5.3% for May, for the most recent month. Wages are down. They missed expectations. They rose only by 0.3% in April and also in May. Both times missed expectations. And the most recent small sign of falling inflation is the Target, one of America's largest retailers. They sell everything. Of course, Walmart is bigger, but they're still quite a significant retailer. They warned about profits because their inventories are full. They bought too much. They weren't able to sell it. What happens now? They have to get rid of stuff, and they're not going to wait until Black Friday. So I think Target is not alone, and they're gonna if they offer discounts, we're going to see inflation falling. Now, these are all tentative signs, and the verdict belongs to CPI, Consumer Price Index, which is the earliest report on inflation. The second one is PC, which is only at the end of the month, more important for the Fed, but it's usually, well, very highly correlated to CPI. And it's a direct measure on inflation. It's not anecdotal about Target or these are sort of the dry facts, okay? And we get that figure on Friday. It's a figure for tomorrow. Now, the Fed focuses on core inflation. because it cannot influence global energy prices, only very little. It cannot impact, I mean, there's a blockade on Ukrainian grain, on Ukrainian wheat in the Black Sea. The Fed cannot do anything about it. It's not going to send warships over there, okay? But it can affect how demand and supply. If it raises interest rates fast, that means it's saving money and the bank is more attractive than taking out a loan and spending it, okay? And it can influence inflation expectations and on hiring of companies, on salaries and things like that, okay? And I focus on core inflation, not only core inflation, but month over month, because when we have year over year, we have this new figure for May coming in and last May's figure coming out. Last May, we had a strong figure. So I think the focus is now on month over month. So we're expecting, according to the FX Rate Economic Calendar, expecting 0.5. That's what economists think. I think it's too high. Once again, it was 0.6% last time, which was very high. They don't think we'll see two back-to-back jumps. And wages during the same period of time, April and May, rose by 0.3. Now, it isn't one-to-one, and there are always revisions to the data, but I can't see, my prediction, my bet, is that we won't see strong figures twice in a row. So if it'll be 0.5, I think it's dollar positive. It'll mean this guy here at the top right, James Bullard, who wants very strong rate hikes, he'll be vindicated. And also this guy here on the bottom left, Christopher Waller, who said we're going to raise rates by 50 basis points also in September and more. He's also going to be vindicated. So it'll keep the door open for 50 basis points in September. And I would also say that a small miss, even 0.4, is also good for the dollar, at least for in the short term, because it would mean if you extrapolate 0.4 for a full year, you get 5% annual core CPI growth. That's super strong. That means core inflation is not falling. So the Fed would have to keep at least its rhetoric very strong. I think it'll be lower. I think we could get even 0.3, matching wage growth. And that would mean we'll get much more talk about peak inflation, about inflation already topping out, already falling down, and it would be undoubtedly negative. Of course, if you get 0.2, it'll be even worse for the US dollar. That's my bet. Dovish Powell in relative terms, and the black eye for the US dollar. Okay, now we have to talk also about all scenarios here, about still not seeing the peak, somewhere there in the mist. If we get 0.6, we had an upside surprise last time. I think it would propel the dollar higher. It's also released on Friday. Friday is a day that traders, investors don't like taking too many risks. So I think it would cause some flight to safety, and we'll get some risk-off flows, fears that if it would raise rates too fast, it'll cause a global slowdown. People will rush into the safe haven dollar, and it would sort of spiral a bit out of control on Friday. Again, it's not my base case scenario. My scenario is that we'll get worse than expected figure. To conclude, every 1/10 of a percentage point matters, and it's Friday, so it means stronger moves because there's no forex trading on Saturday and Sunday. Okay, so I talked quite fast about everything going on about these two events. So again, my bet is that we'll have lots of action. You're welcome to ask questions while I open the euro dollar chart. Okay. Let's examine the charts. Welcome to ask questions here, and going to FX Rate charts. I'm going to, I hope you all are familiar with this feature of being able to save your charts and load them once again. Yeah, so let's look at the charts live. Okay, what I see here is euro dollar constrained in this kind of love triangle, or not so much love, range bound, which is very typical to days before big events. Okay, so we have lower highs and higher lows. We have narrowing of the trading range. The latest move, we've seen euro dollar jump, well, move quickly about that downtrend resistance line, but quickly retreat. I see it as just it's a false move to the upside. In any case, we haven't broken above 107.50, at least not yet, which was a high point earlier this week, or 107.65, another high point. And in any case, the high for this cycle was reached just less than 2 weeks ago, is 127.80. So for me, it remains in range. These are the three immediate levels. Moving even higher, my levels to watch are 108.20. Let me zoom out for a bit. Ooh, maybe too much. 108.20, which was here, capped euro dollar back in April, and then 108.50. And of course, the big level is 110. Let's zoom in once again to look at the levels to the downside. I'm looking at the 4-hour chart in case you've been wondering. So we're looking here at support at 107.15, which was the high point yesterday. Also within this narrow range. Maybe it's not clear enough to see. Let me make these lines a bit thicker. Yeah, I guess it looks better right now. So 107.15, and then lower we have 106.65, also the support line recent days, and then we have 106.40, which was separator of ranges. Here it provided support in late May, and beforehand right here it was a resistance line in early May, so that's for me a key level. But lower we have this false break here to 106.25, and then 106.05. Well, already talking about lower levels. So what we have normally is that we have narrowing ranges before big events. If we see euro dollar move toward the middle of the range, middle of this triangle, which I would say around 107, and also currency pairs like to cling to those round numbers to hug them, and 107 is the level I'm watching, then I would say, okay, markets are now back to neutral mode, back to anything can happen. 25 basis points is in July from the ECB is baked in. 50 basis points hint of that is hawkish from the ECB. That means euro dollar could jump higher. Okay, and just 25 basis points and lower forecasts would be bearish euro dollar lower. But if we see, in my opinion, if we see euro dollar holding onto this high ground, I would say we could have a bigger buy the rumor, sell the fact. That means investors are already expecting a strong figure, already pushing euro dollar above this triangle, and that would mean, in my opinion, that the threshold for an upside surprise is very high, and there's a much bigger risk to the downside, whatever the ECB says. Okay. Now moving on to Friday, at the moment I also think, well, at the moment things are neutral in my opinion. Markets are not yet positioned, but if I would see on Friday morning before the event this dollar is strengthening, I would say, ooh, markets are expecting a very strong number. There is an opportunity to go against the trend. If we see the dollar weakening, I would say, oh, markets are already thinking like I'm thinking, that we'll have a weak CPI number, and we'll see the dollar strengthening. So it's already maybe 0.3 would already be priced in. But if we see the dollar stable, I would say totally neutral. It can go both ways. No bets on the table. Anything can happen. Okay, so these are levels to watch. We have a few more minutes for your questions. Let me once again share, if you're not a premium member, just right now. So let me share the link. For those of you on a premium, we've seen lots of activity in our fun Discord channel. Lots of your questions getting answered very fast, and I think that makes it worth your money to pay for premium service. I'm there, Tomas Sayas is there, and lots of other people as well. Yeah. So, any questions? Maybe I'll use the time while I'm waiting, or a few minutes we have left, to talk about another currency pair, which is defying anything you can think of in terms of technical analysis. I'm talking about dollar yen. No such thing as overbought. So what? This is the 4-hour chart. The RSI is above 80, extremely overbought conditions. But yeah, it's been fueled by Bank of Japan Governor Haruhiko Kuroda, who said that monetary policy will stay loose, contrary to the ECB, which is raising rates, contrary to the Fed, contrary to even the Swiss National Bank, which began talking about acting against inflation. So that's the main reason. If we zoom out to the daily chart, we're also seeing the RSI above 70, not very extreme, but quite high. I think at some point we'll get some kind of an intervention to strengthen the yen because international partners of Japan don't like Japan having such a big competitive advantage, and inflation eventually will rise in Japan if import prices are rising because of the weak yen. Cannot last forever. When we talk about QE, Japanese central bank has an even more extreme version of QE. They have what's called yield curve control. They keep 10-year yield limited, capped at 0.25, and to do that, they have to create more yen out of thin air, weakening the currency. So that's really extreme. I don't think it can last for too long. But look, John Maynard Keynes said markets can stay rational longer than you can stay solvent. So that's what we're seeing right now. All right. I'm not seeing any questions. So I'll begin wrapping it up. Saying again, thank you to everybody who showed up today. I see quite a few of you, but apparently if you are shy, if you're subscribed to Premium, you can ask any questions on the Discord channel or more privately on the button there that we have. It reaches our mailbox. I wish everybody success if you're trading, or in general success in trading, and more specifically about today's subject, which is well, the upcoming two big events, Eurodollar about ECB and US inflation. Next week we have the Fed and the Bank of England. The Fed is of course a huge event. We have another webinar on Tuesday, if I'm not mistaken. I'm not sure if it's the same time, but anyway, you have all the information on fxfreet.com. This time, I mean, next week's webinar is exclusive for premium members. So let me see exactly when this this webinar is. Same time on June 14th, which is Tuesday, right? So you're welcome to join that. Okay, I see a few people saying thank you. Thank you guys for joining this session. And we'll be covering these huge events: ECB, inflation, Fed, Bank of England, everything live. We wish everybody good luck and many pips. And see you all soon. So that's it for today. Thank you and bye-bye.